Good morning, guys. How's everybody doing? Can you guys hear
Good
me?
morning.
Sorry about the
I can
little
hear.
delay. We had some technical difficulties jumping on the call, so I apologize for that. Can you guys hear me well? Can you guys hear me well?
Yes, I
Awesome,
can hear.
awesome. What's up, Nelson? How are you, man?
I'm all right. Hanging
Awesome.
in there. Just coming from the Doral office.
Oh, really?
Yes.
So you went to Rosie's Clemente's training?
Yes, about the 2020.
How was that?
Oh, it was very interesting. Got a lot of information. Um, I speak both languages, English and Spanish,
Okay.
and this will be helpful to a lot of agents, even seasoned agents, because at the end of the year we have to pay these taxes, and if you get yourself organized, you know where you're making the money.
Right. Absolutely. Yeah, Rosie's great. She's part of our branch, so she's really good. What's up, Casey? How are you? Alex, are you in a place where you can turn on your camera? I like to see your faces. Good morning. Good morning. There you go. There you go. If you guys can turn on your cameras, it will be great. If not, no, not a big deal. What's up, lady? How are you? All right, guys. I just want to make sure that you guys are on the call, and I just jumping in just for the sake of jumping in. I want to make sure that we bring a lot of value to you guys during these calls, and then also it's a sign of respecting each other's, right? I'm always a big believer on what's up, Alex. Thank you so much for jumping in on the call. Buy City Lending is always big about making ourselves really uncomfortable. I know cameras are not our things for most of us, including myself, but I'm putting myself in a very uncomfortable position to bring you guys value. So I expect the same, right? This is about a team collaboration and a team effort. And the more that we can chime in, the better for all of us, right? So this 4 trainings that we're gonna have in December is about pre-approvals and pre-qualifying buyers, right? The reason why we decided to do this for the month of December is because over the last 3-4 months, we've rubbed shoulders with a lot of top producers in your industry, and we find out that they all know how to pre-approve people. Either at one point of their life of their careers, they were mortgages, and now they focus on real estate. And some of those actually are brokers who they do both, right? They have the real estate brokerage, but they also have an in-house lender, kind of like Buy City Lending and PRMG it is for you brokerage, kind of like the same thing. But the brokerage owner on real estate is part owner of the mortgage business. And that's why actually, not only for the financial gain, but also for the preparation aspect of things, right? When you're working with buyers as an agent, the more understanding that you have about somebody that needs and seeks for financing, the better you're going to be prepared to help them. And then you're not just going to be an agent who passed the baton to a lender or many lenders, and then kind of like putting your credibility on others people's hands, right? So my goal at the end of this call today is not for you to be a loan officer or to be a pro, because that will be creating a false expectation. But if we can achieve having a better understanding of what does a pre-approval means and what is the difference between a pre-qualification and a pre-approval, I think that we will make a lot of progress. And if you guys have any questions, feel free to raise your hand or chime in. I wanted to be a participate, that you guys participate in this type of trainings. You guys with me? Awesome. So I
Yes.
created awesome. Thank you. I created a little checklist for you guys. I'm gonna share my screen. Just bear with me real quickly. Let me find it. then we'll go from there. Let me see if you guys see it. All right, let me know if you guys see it. Thumbs up on your screen if you see it. For those that are in maybe in a noisy environment. Perfect, perfect. So I see most of you guys thumbs up. Perfect. All right, so I created a checklist for all of us today, so that way we can have kind of like a roadmap, right? So this is more or less when you guys refer clients to us, for those that are working with Buy-Sell Lending and PRMG right now. This is kind of like our thought process. We don't go through all the questions in a interrogation format. When you guys refer a client to us, obviously, number one, we make them feel extremely comfortable. Dariel and I, Dariel, for those that don't know who Dariel is my other partner, my other loan officer in my team. Dariel and I have been knowing each other for 15 years, working together, almost 10 years together. So the synergy that we have and the level of understanding that we have in regards of the people business is pretty on point, right? And it's not because we're special, we're unique, but it's just simply because we have the experience, right? So when somebody, whether you guys refer to us by text or by call, we actually make them feel extremely comfortable because of the background that we have in sales and service. But more importantly, we give them the reassurance that working with you guys is the best decision that they can ever have made for this buying process, right? Just always building your confidence and always building your brand. And the format of the questions, it comes out more into a conversation basis, but I created this checklist for you guys to have an idea and a roadmap of what is it that we're looking for when we're speaking with buyers. Does that make sense? Awesome.
Yeah.
So the first question is first time home buying, right? Why is that important? Because it obviously opens up our mind when it comes to different programs that we have on the lending side. If this person can really be eligible for an FHA loan program and whatnot. And then just to kind of have a level of understanding what the buyer is at when it comes to buying a home, right? There's some people that have no idea, no clue. You also have some clients that think they know, right? Because now these days with the biggest problem that we have in our business, whether it's real estate or lending, is the fact that we have things like YouTube and Google where we think that we don't need anybody, right? We don't need a professional to help us, right? I've seen some crazy stories of people trying to do like surgery on their own, watching YouTube videos. So same things happens with real estate and lending, guys. It's exactly the same thing right now. The biggest problem that we have, the biggest challenge that we face is just the fact that there's too much information and we don't really know what's right and what's wrong. I'm sure that you guys lived it on real estate as well. Second question is, are you currently active or previously served in the U.S. military, right? Why? We're trying to see if they actually serve our country to see if we can actually get them into a BA loan program. Very important, understanding if they're self-employed and W-2 employees, right? Why is that? Why does that matter? Is very simple. When you are actually trying to pre-approve somebody, you actually trying to peel an onion, right? You try to go through different layers of filters to see what's going to be the best route for your buyer in terms of loan programs, right? So BA is actually a loan program that actually, gives a lot of benefits for military personnel and also wives or widows of military personnel. So that's why we asked that question. And then in regards to W-2s and 1099s, it's because from the income perspective, there's two different routes. If you're W-2 is one route, if you're 1099 or business owner is another route. So there's three main things that a bank is going to look for when it comes to pre-approving somebody, right? Number one is income, right? And when we talk about income, we want to make sure that your income is is consistent and then that you can prove it history wise over the last 2 years, right? And most programs, right? The reason why I say most programs is because for those that don't know, PRMG is a lender that specializes in mortgages and mortgages alone. What does that tell you? It gives your buyers access to different loan programs. So as loan officers, we're always going to try to pre-approve your clients in a qualified mortgages. What are those qualified mortgages? Your typical FHA, conventional, which is two types of conventionals, Fannie Mae, Freddie Mac, whether it's a BA loan, right? Veterans Affairs loan, and then whether it's an USDA loans for rural areas, right? That's qualified mortgages. Those are backed in by the government. And then those ones are always going to be our option number one. Option number two, we have our non-qualified mortgages. What are those? Bank statement loans, whether it's 12 months, 24 months. We have DSCR, which stands for debt service ratio coverage, which is nothing but a loan that there's no income requirement. So the reason why I say no income requirement is because you probably heard a lot of times people saying, well, if I don't have income, I cannot qualify. That's not the case for somebody that owns a home already as a primary home, and they're trying to buy a second home or an investment home. We have a loan program where there's no income requirements. The property itself becomes the income. So as long as that rental income coverage on a one-on-one ratio, your mortgage payment, we have programs that your buyers can actually buy a second home or an investment home. We have CPA loans, which is basically no income again. It's just your CPA stating what your income is. And then we have assets only loans, right? And then another one is ITIN number. ITIN stands for identification tax number. We have a loan program for that. And the last one is we also even have our in-house private lenders. So we do have a lot of options for your buyers. We're not going to touch on the different loan programs. We'll do another class for that. Today is all about pre-approval, pre-qualifying people. Okay. When we talk about income, why it's so important to understand the pay structure of your buyers, right? W-2 was one route, 1099 is another route. So we want to kind of like have an understanding of how do they get paid. How many times you're talking to somebody and then you ask them, you know, for those that ask financial questions to your clients, how many times you've been in a position where you talk to somebody and you ask them about questions about income, and they'll tell you, yes, I know how do I get paid, and they give you a number, but then when you go in a little deeper, they don't know the difference between salary, they don't know the difference between hourly, they don't know, you know, what's base, what's commissions, what's the difference between, you know, how do you calculate overtime. So we ask those questions to have a better understanding about the way they get paid and the pay structure. And always remember that anything that you put in a loan application, it has to be sourced out. You got to have some kind of paper trail, right? So the question is very simple. Have you worked in the last 2 years, and can we prove it, right? Whether it's 1099 or W-2. Little hint that I want to give you guys is when you have a buyer that is 1099, and then that 1099, let's just say, for example, I've been 1099 most of this year, and then I have the history to prove it over the last 2 years. But in July, I got a W-2 job, right? If I got a job a W-2 job in July this year, 2022, that automatically, that 1099 history is out of the way, is no longer needed. We're only going to focus on W-2 moving forward. Why I'm explaining this? Because a lot of times I hear agents and other loan officers, for whatever reason, disqualifying people who are really strong in other areas, and this area of income, you're disqualifying them when we have a lot of loan programs that we can look at. That's why it's very important just for me today to give you the basics about pre-qualifying somebody and versus pre-approving somebody. So that way we can be working with you guys hand in hand to provide options to your clients. We're in the solution and the solution business. If you provide solutions to your clients, the more they're going to remember you. The next question is, can you, obviously we talk about that, can you prove employment, whether it's, W-2 pay stubs in the last 2 years, or whether it's your taxes for those who are 1099 and business owners, right? Can we prove it? Do we have the history, right? The reason why I put this one here for school transcripts is because there are certain occupations, like the most common ones are health in the healthcare, and then attorneys. Those require anything that is a professional occupation. Those require you to go through an extensive educational career, and then sometimes we have loan programs where we can accommodate the fact that you were in school for that profession and now you have a job offer letter. We can actually pre-approve them. Something that I forget, guys, I'm sorry. I want to make sure that you guys understand the difference between pre-qualifying somebody and pre-approving somebody. Right now, we're going through a pre-qualification training, right? Meaning that We're going to ask the questions. They're going to give us the answers. And then based on those answers, I can tell you more or less how much you can pre-qualify for, right? So the word pre-qualify means that there is no paperwork, right? It was all a verbal conversation, or you going online, filling up the answers, filling up the blank spaces for the questions. You provide your answers. And then based on the answers that you gave me, I'm going to tell you how much more or less you can be pre-qualified for, right? That's pre-qualification. The reason why it's so important for you to know the differences is because you don't want to be the agent that thinks that is the same thing, right? Pre-qualifying and pre-approval. Pre-approval means that you went through an extensive analysis of what you said that you made as far as your income, that your credit is as far as your credit. So the difference between pre-qualification and pre-approval from the income, credit, and assets perspective is that now on the pre-approval, you show the lender that you have the documents to back up your story as far as over the phone or over the website. Are you with me? You guys with me? Awesome. So that's basically the main differences between pre-qualifying somebody and pre-approving somebody, right? Now we ask basically what's your total annual income, right? Just for you to have an idea, a notion of how do you calculate more or less what the bank is going to consider your qualified income. You ask somebody how much money they make a year, right? Or how much money they make a month, right? And then you multiply, right? If they give it to you on a month basis, you multiply times 12. If they give it to you bi-weekly, you multiply it times 26 pay periods bi-weekly, right? If they get paid bi-monthly, you multiply that times 24. And if they give it to you weekly, you multiply 52 weeks in a year, right? Then after you find out the answer of what's the total annual income that that individual makes, and you divide it by 12, you're gonna cut the income in half, 50%. Why 50%? Because there's no bank that is gonna qualify you over 100% of your income. Why is that? Can somebody tell me why can I not use 100% of my income for a mortgage payment? One person at a time, guys.
Because you have expenses.
Thank you, Casey. Right on the money. Because you have other living expenses, right? You gotta pay gas, insurances, food, right? Living expenses. So that's why a basic mathematical formula that you guys can actually apply more or less how much the bank is going to lend you on is annual salary, right? However they give it to you, whether it's weekly, bi-monthly, or yearly, you need to find out what's the monthly income that they're making, and then you split it in half. So if I make $5,000 a month, right? Half of my income is $2,500, right? That's my qualifiable income. And now you're going to deduct consumer debt, right? So when we look at pre-approving somebody in terms of their income versus their debt, there's two type of ratios. One is your front ratio, which is your housing living expense, meaning that if somebody's renting and I'm paying $2,000, right? If I'm going to pay more than $2,000, now I got to be careful with my front end ratio, which is called housing expense ratio. Is how much out of my qualified income is going to go towards my new mortgage payment. And then we have something that is called back end ratio, which is the relationship between your income versus your consumer debt. A lot of times people get confused when it comes to their consumer debt versus their salary, meaning your back end ratio, because they think that their cell phone and the utilities are part of those debts. Okay, utilities are never part of your back end ratio, which is your debt to income ratio. What is really part of your debt to income ratio are things that you have a monthly payment for, and things such as credit cards, personal loans, business loans, auto loans, right? And then even then, at times when you don't have those being reported on your credit report, other things can be like solar panels, right? That's a very good example of debt that doesn't show on your consumer reports, on your credit consumer reports, but it's going to come out on a fraud report. So one of the great things of working with us is the fact that we think as underwriters when we're doing pre-approvals, and not necessarily not to pre-approve them, but to educate them about certain things can actually be an obstacle. And we want to know now that you're getting pre-approved, so that way we know if we have a plan to overcome those obstacles, right? See, a lot of loan officers and a lot of lenders don't really take that in consideration. They give you a pre-approval. They don't explain to you anything as far as the agent representing your client. And then they don't explain anything to your clients in regards to those obstacles. And that's why you hear stories in the industry of, oh, my loan officer never answers the phone, or, I had somebody that was pre-approved with my lender and they completely ghost me out, or they went in vacation and they didn't even tell me. Guys, most of the times it's because, unfortunately, there was an obstacle in that pre-approval. They didn't have a plan. And then now they don't answer your phone because it could be either they're really legitimate busy, or they're just embarrassed to tell you, hey, I wish it would have worked, and then move on, right? So by City Lending, we actually think as underwriters, and we want to know the whole story about your clients, so that way we can help them, right? Because what good are we for you guys if we actually just give you a pre-approval letter, right? Which is nothing but a pre-qualification. Your buyer told me that it makes $100,000 a year, that they have 780 credit, and then they have $100,000 put away. Boom, I give you a pre-approval letter. And then when your client send me your documents, half of that story is true, right? That gives you no value. You guys are going to be wasting your time, wasting your energies. And the outcome of that is that you will never use us again for pre-approvals, right? That's why we're vested on you guys as lifestyle agents to make sure that we do a very good job, closer to be perfect on the front end for pre-approvals, so that way we have the least amount of obstacles on the back end. As far as credit scores, right? So credit scores is something that for us and by City Lending, we really work with your buyers, because if they need help repaying credit, we do have great relationship with somebody that is really good at repaying credit. For those that have already a relationship with a credit repair company and you guys feel comfortable, hey, happy to work with them, not a problem. What I'm always trying to keep in mind and try to preach to you guys is that anytime you refer your client to somebody, you're literally using your credibility, hoping that that other person does a good job, right? So the only thing that I want to mention there is whatever companies you use, whether it's on the lending side, credit repair sides, inspections, anything that you recommend to your clients, you always want to ask yourself, would I be doing business with this individual if that person is me, right? Would I be referring my own personal business to this company? Because if the answer is no, then you want to reevaluate if you want to send your clients there, right? You're literally trespassing your credibility to that person. So when it comes to credit, 580 is the minimum credit score for FHA. 620 is the minimum for conventional. Now, here's what I'm going to challenge you guys. Minimum criteria does not mean that you're going to get a pre-approval, okay? You cannot expect to have somebody with the minimum credit score and the minimum down payment to get an approval from underwriting, right? So that's how you want to approach this topic of credit. So sometimes it's better to help the client, or help your client in this case, to prepare a little more when it comes to credit or any area whatsoever, whether it's income, credit, or assets. So that way they see you as a trusted advisor, that you're not chasing a commission, right? You're literally trying to help somebody to achieve one of the biggest, dreams I ever had, right? Owning a home, by following a plan, following the steps, and being patient, right? If home ownership will be easy, everybody will own a home, right or wrong, right? So when it comes to credit, we want to make sure that if there's something on our end that we can help your clients to bump up their credit, it's not only going to make you look good, but it's going to help your client to have better terms on the loan. So that's why credit is so important. We don't focus so much on disqualifying people. We focus on giving people a plan. So if your client is not ready from the income perspective or credit perspective or asset perspective, they're working with professionals who are part of your team to give them a plan to get to the ultimate goal. That's the type of service that you want for your clients. So that's just minimum credit scores. We talk about DTIs, which is, debt to income ratios. It's very important for us to know if they have a price range in mind with you guys. If you guys have looked at properties with them, if they have kind of like a feeling for the market, just for us to have an understanding what are their goals, right? What are they trying to achieve, and what is the budget, right? Because one thing is what I qualify for, another thing is what I can afford, right? I want a mansion. Can I afford a mansion? That's an answer that only the individual can give you, right? But we try to be realistic in terms of their budgets, and then we work. Our job as lenders is to work with their budgets to accommodate them and see if they can actually buy something. Buying a home is an attempt, it's a process, it's an attempt. And then working with professionals like you should be an easy job to either help them prepare now or help them prepare in the future. And then you nurture that pipeline of buyers that you guys have. I put also here for, primary home lowest down payments are 3.5 down payment for FHA. FHA has something that is called funding fee, which is 1.75% of the sales price of the loan amount. So LTV stands for, loan amount, right? So it's your purchase price minus your down payment as your loan to volume. That's what it stands for. Sorry, guys. So your purchase price minus your down payment is your LTV, right? That's a percentage. And then typically 3 to 5% is conventional. The 3%, just so you guys know and have a clear understanding, 3% is a program of Fannie Mae only for first-time home buyers. Okay, if you're not a first-time home buyer, you cannot go on a 3%. You gotta go into 5%. And then aside from that, the 3% comes in place when you are looking at houses in a median income bracket, right? So if I know as a fact for the 3 county, Miami-Dade, Broward County, and Palm Beach, the median income bracket is $57,000. And I'll send you guys a tool that you guys can see per county what is the median income bracket. Then the typical Fannie Mae, Freddie Mac down payment is 5%. That's the minimum down payment, right? 0% down payment for VA. They only pay a funding fee. And then the funding fee is depending on how many times they have used their VA benefits, right? The Veterans Affairs loan, mortgage loan benefits, right? And I'll give you guys also a tool that kind of like breaks down what type of funding fee this individual will pay based on how many times they have used this benefit. Second homes, I know that you guys are experts in real estate. Second homes right now, from what you've seen, is down in trends because of the interest rates. Obviously, that's one of the biggest reasons. When you buy a home as a second home or buy a home as an investment, you do take a hit on your interest rate because it's not the same as you living in the property as your primary, right? But just to give you an idea, second homes require a minimum down payment of 15% plus closing costs. And then investments typically is 20% down payment plus closing costs. And then again, it varies on the loan program, right? Our job as a lender is, after having an understanding of your client's income, credit, assets, and liabilities, is to kind of like give them options when it comes to loan programs. There's going to be times that maybe we cannot take them on the conventional route, meaning that, FHA, conventional, USDA or VA. Maybe we can take them to a non-conventional route, but it's going to go with the flow of having a conversation of understanding your client's financials. I've also put here the seasoning periods for bankruptcies, right? I'm very big on not demotivating and then not disqualifying your clients from a perspective of, oh, okay, you have bankruptcies, your seasoning time is not over, so call me when it's time to talk about this, right? We're not advocates of that. We're very big advocates of giving your clients options and plans, right? If your client is not ready to buy in the next 30, 60 days. When is it going to be ready? Does it look like 6 months? Does it look like 3 months? Does it look like a year? Does it look like we're going to have to wait a little bit more time because they have things on their credit that disqualify them to apply? Does that make sense? You guys with me? Okay, awesome, awesome. So I'm gonna stop here because I'm talking about, I'm talking too much. I want to give you guys the floor. I want to be a big asset when it comes to pre-approving and pre-qualifying somebody. Hearing from you guys based on what you guys know, what you guys have experienced, and where are your obstacles where we can actually, work with you guys on those obstacles and give you the tools and the resources that you guys will need to overcome those obstacles. So I'll give you the floor, guys. One person at a time, guys.
Hi, can we get a copy of this, right here, this questions, requirements, guidelines?
Absolutely. If you
Thanks.
guys shoot me your, you guys have my information or no? I'm gonna put my okay, I'm gonna put my cell phone number here. I want you guys to text me.
I'll text you.
Guys, I want you guys to text me so I can send you the checklist that I created for you all, just for you guys to have some reference and having a roadmap. Just text me your name and email, and I'll go ahead and send it to you guys. Guys, I really want to make sure that we're all uncomfortable during these calls. And when I say uncomfortable, is having making sure that we're on the camera, engaging with each other. This is a time for you guys. I don't want nobody to feel like this is a judging place, or maybe you're gonna sound weird, or you're gonna, people are gonna know that you don't know the things that you're supposed to know. Nothing in life is things that you're supposed to know. Everything that we learn by asking questions, by failing forward, and by helping each other. One of the great things that I love about working with you guys is the fact that you guys are family, that you guys are not, you're always engaged. For those that I've seen in the trainings, I always seen them asking questions. So I don't want this to be an exception. This is a time for you guys. So whatever questions you guys have, whatever obstacles that you guys are facing, whatever scenarios that you have gone through lately, that maybe you feel like you didn't respond correctly, you didn't have the answer on hand, I want to make sure that I'm an answer for you guys today. So please. All right, so you guys left me no choice, but I'm sure that you guys heard volunteer, right? So since I didn't hear from anybody, I'm gonna go and pick on you. Okay, so Casey, I haven't seen you in an office. Well, tell me, what office do you belong? How long have you been in real estate? And tell me what you know about pre-approval and pre-qualifications.
So I work at the West Palm Beach office. I've been in real estate for probably 3 weeks now. And about the pre-qualification, I talked to Dariel about it, and he told me like the basic things I need to ask them, but I haven't like talked to many people about it, so I don't have many questions. I'm trying to think of some, but I don't have like a lot of questions because I don't have a lot of experience with trying to like get that pre-qualification. I think I've done it with 2 people. One of them was an accountant, and another person was like my coworker's brother. And the problem was my coworker's brother, they didn't have enough in savings. And they pre-qualified like I think a couple of years ago, but then they weren't able to qualify this year because they didn't have anything in savings. And then the other one, they qualified for a loan, but they just didn't qualify for a big enough loan. So they were gonna wait till next year for better tax returns so they can get a better loan.
Good. Well, thank you so much for introducing yourself and letting me know that you're from the West Palm office. And yeah, 3 weeks in real estate, man. Okay, this is the perfect time to jump in real estate. I love this market because it's a plain field market. Whether you're a top producer, whether you are a veteran in the industry, whether it's somebody coming back into the industry or brand new just like you, I guarantee you one thing: you're gonna be successful if you stick, having the discipline, being consistent, and be surrounded by good leaders, which you have good leaders in your office, man. Um, Pre-qualifications, in terms of talking to more people, it seems like that's basically the area that you want to stick on, right? You want to have conversations with people in regards to income, credit, and assets, right? And use your common sense. So how does it look like having a conversation with somebody without being so direct about, hey, how much money you make, and what's your credit score, and what liabilities you have, and you have money put away, right? So how does it look like from an interrogation setup versus a conversation setup? Can somebody jump in and give me an example before I give mine? Alex, I'm gonna pick on you. You have the experience. I know I spoke with you a couple of times. I know that you used to be in real estate, and now you're coming back. I wanna hear from you. So tell me, how does it look like from interrogating somebody about something that it can be perceived as, oh, I don't want to be so intrusive, and that's your personal information. I'm gonna just let my lender handle it. How does it look like from an agent that is actually, having the skills to have a conversation with somebody where I'm gonna still find out the information that I need, not from interrogating my prospect, but making them feel at ease that they can share some information with me from income, credit, and assets?
I'm going to go about it from a recent example that I actually had. So I'm back in the industry, and obviously everything is pretty much brand new all over again, because I worked in the industry 15 years ago. So things have changed enormously. But I did have a recent thing. I'm working the rentals right now. That's what I'm trying to get moving and get motivated on, and kind of getting me moving. I did have a renter about 2 days ago that I was showing a property to, and they, at the end of the showing, they were not too interested in that apartment, but they were interested in continuing looking. Their price range is up to $3,000, which is a good price range right now in the neighborhoods they're looking for. But they did kind of start a conversation with me of they threw it out there. They say, well, what if we buy? And I said, well, you know what? I was actually thinking about that for you already, because your price range is already in a good area. And since I've seen your qualifications as far as, the questionnaires that I send them, based on what credit they already have, it's above a 650, about how much income. I mean, they have first, last, and security. So that's $9,000-$10,000 saved up already. So you're already on a good path to looking like a really good first-time home buyer. And then I just continue the conversation with them, and then they start saying, well, why I'm going to throw away my money to rentals. And of course you're going to throw away your money to rentals. Better for you to buy something. I've already seen that you're pretty qualified, and if we can continue the conversation as far as qualifying you further for your income and your credit and anybody else that's going to be applying with you, then I think the first step for you is immediately getting you with a lender and just sitting down with a lender and answering all of these important questions that you have, because I believe that home buying versus renting for you is the best option. So that's kind of where the conversation leads. And in between the conversation, it immediately breaks into a conversation type instead of interrogation, where they're attacked, a myriad of questions. And you also have to know how to read your audience. Are they in a rush? Are they, willing to stand there and talk to you for a little while longer? Do they want to meet you again the next day? And maybe you want to take them to another property and show them again how renting is not the way to go, and go to, okay, I'm going to start sending you a list with houses to buy, and start taking a look at what it is that you want, and, start asking yourself the questions of the areas you really want to live in. One of the things that they pointed out, we were looking at a townhouse in Fontainebleau area, And he said, well, I don't care if it's, you know, if we buy a house and it's all the way in Homestead. And I said, well, but where's your work? Where do you work? Because if you work in this neighborhood, why would it make sense to save, you know, to spend save $50,000 when you have to think about your tolls, your gas, your mileage, your car expenses, your time driving in Miami. So, you know, let's stick to, even though you're going to get, you know, maybe over there, you might think you're getting more bang for your buck, but when you think about the process, you're going to be better over here. So, which kind of brings it all back together. So they're very, you know, you just got to gauge people and read them and engage like you're having a cafecito. You know, you're just talking normal and just getting information for people like you've known them, you know, for a while, and not be afraid to ask those questions, inserting them in a very nice and diplomatic way. And people will respond. That they're, you know, they're willing to. You also have to know how to read them.
I love it. Love it. Thank you so much for sharing, Alex. I love it.
My-
Anybody
my
else,
pleasure.
guys? Nelson,
Yes, sorry.
talk to me, man. I haven't heard from you.
As you know, I just started several weeks ago. I don't even know how to start the conversation with the pre-approval. Like I haven't sat down. So I can have a baseline. Like I'm good with talking to people, but I like to be informed because you know you get those questions that someone I don't know the answer to, and I hate the word I don't know when you talk to somebody. So that's the type of person I don't like when I talk to people in my business, that I've been in the business of construction over 30 years, is I don't know. Or, you know, I'm the one that I'll find out and I'll get back to you. Or if I know the answer, I'll give them the answer. So that's what I'm trying to figure out. How can I even start this conversation with somebody and explain to them, okay, these are, because I don't have the tools to say, okay, you know what are your numbers? And that's where I'm at. That's what I'm trying to go the training to figure out if I can pull the information. Because like I said, I don't have a mentor and I'm just trying to figure this whole thing out.
Okay, we'll help you with that. That's not a problem. But just like Alex said, right? It's just like having a conversation, like you just having a coffee with somebody and you're just learning from them, right? So there's 4 things that we always want to have in mind from somebody that is looking to finance a home. Income, right? So you want to find out, I'm not going to ask you how much money you make right in front, right? Remember, guys, I'm not an agent, but I've been in sales for 15 years. When it comes to sales, sales is sales, right? Whether you're selling a home, whether you're selling a car, whether you're selling yourself, it does not really matter. Selling is selling. And selling is just the art of you persuading somebody to come out with your way. That's what sales are, you know, the plain definition of sales, that's what it is. So when it comes to income, what about asking them what do they do for a living, right? Hey, what do you do for a living, right? What do you do exactly in that job position, right? And then if you don't want to be so intrusive, guys, we have Google, right? Google their position, Google their company, Google their position, see what's the average salary. So that way that you can actually have an idea if you don't want to ask the question. If I was an agent, I wouldn't be afraid of asking questions because I've been in sales for 15 years, right? But I'm always thinking about having a conversation. So when I ask a question, before I ask you a question, I'm going to tell you why I'm asking the question, right? So Alex, thank you so much for having, this conversation with me today. We look at houses. Just, obviously my job here in real estate is just to, help you to achieve your goal, right? So if I'm able to help you achieve your goal, if I'm able to provide you the education, I have I have a team where my goal is to help you achieve your goal. So if I'm able to provide you the education, provide you the information and answer all your questions to the best of my knowledge, is there any logical reason why would you not do business with me? Right? Say no. Okay, perfect. So now I want to give you, an idea more or less, where would you be from the pre-qualification perspective, right? And then as an agent, I definitely believe that every agent who is looking to be a producer or have success in real estate You gotta have these conversations with your clients. You have to, because if you don't, then you just blindly passing that person to a lender, and then you just getting in the roller coaster of emotions saying, hey, I have a buyer, but you really don't have a buyer today. You may have a buyer in a year from now, in a 6 months from now, in a 3 months from now. And then you put in all your efforts and all your energy in one single lead. And then what usually happens when that lead disappears? Because it's gonna happen, guys, right? People change their mind, people change, talk to other people, ask the opinion from somebody else. But at the end of the day, we gotta take ownership of knowing that if you didn't ask for the commitment for that individual to be working with you and solely with you, they're gonna leave, right? So typically, I'm always thinking about position my question is before I position my questions, I'm actually giving you the reason why I'm asking those questions, right? So what do you do for a living? Oh, that's awesome. And then what do you normally do? Like, what are your responsibilities? How long have you been there, right? How long have you been there, right? Why? Because I'm trying to see if they have the 2 years work history, right? I don't ask, do you have the 2 years of work history, right? I ask, how long have you been in your current job, right? And if they say, well, 6 months, oh, wow. And then what do you do before, right? What's your background, right? Is this something that you have done for, for a long time, or is this something that you recently doing, right? And I'm trying to understand and paint the picture to myself, so that way I can have a better understanding about my client situation. Because how can we actually help somebody when we don't understand them, when we don't know their background, right? That's basically as far as income, right? And then as far as, how much money do they make? I usually get more or less how much you're netting a year, right? Or what did your income taxes say you made last year, right? Easier than asking them, you get paid weekly, you get paid bi-weekly. That's our job as a lenders, to understand the payment structure. You just want to have an idea. Whether it's true or not true, that then is different. Because if I'm building a relationship with you, I'm breaking the ice on the front end, I did a great job, you're increasing the odds of those answers to be more accurate once we get papers, right? So more or less what you net last year, right? So I want to give you an idea more or less what would you be from a pre-qualification perspective. When was the last time you checked your credit? Do you typically check your credit, or do you have a monitoring credit services, right? I'm trying to understand if this is somebody who is in top of their finances, or if this is somebody that really pay no attention to their finances, right? And I keep moving on, peeling the onion, right? What car do you drive? Versus asking them, do you have a car loan? Do you pay for a car loan, right? A little bit too intrusive. What car do you drive? Is it paid off? Do you lease vehicles? Hey, what's your takeaway when it comes to buying a vehicle, lease or finance a vehicle, right? So that way I'm kind of gauging like what kind of monthly expenses you have, right? So excluding your living expenses, more or less, what do you pay a month, monthly for, things like, credit card. Do you pay credit cards on full? Do you normally revolve, right? Just trying to have a gauge and engaging them and see if they're really involved in their finances, or if there's somebody that really pay no attention to their finances. In case you have a question.
Yeah, so when say if you're having this conversation over the phone, would I want to write all this down either on my phone or on like a piece of paper and then send it to one of you lenders to make it a lot easier instead of having to describe the whole situation?
That's a great question. There's a great question. Now, I want to challenge you, because when you said write it down in a piece of paper, in this business, you need something that is called Client Relationship Manager. Stands for CRM. Okay. You need to have some kind of system where not only you have your prospects information, but you actually put in notes in every single conversation that you have with your prospects, right? Clients is when you're working with them. Prospects is just having a conversation with people, right? You want to make sure that you put notes in every single interaction, whether you call me, text me, or email me. I'm going to put notes on my CRM, Client Relationship Manager, right? So that way I can build a picture. So that way I can build a profile, so I can have a better understanding. Guys, most of the times we're asking for business from people that we don't really know. How can you really expect somebody to trust you with financing or buying in cash, whether they're looking to buy cash or whether financing? It does not really matter. The same outcome applies. How can you expect somebody to trust you with this process when you don't know anything about them? You don't know where they work. You don't know what they do. You don't know what their family. You don't know the occupation. You don't know their lifestyle. You don't know their hobbies, right? Now, think about that for a second. And now think about how your business will look like if you do a good job building a relationship with somebody, right? Let's say, Casey, you started cold, really cold from somebody, right? Whether it's, maybe a coworker that you haven't talked to much, right? Whether it's a stranger that you came across grabbing a coffee in Starbucks, whether it's a family member is a family member by blood, but as far as relationship, you don't have a relationship with that person. How would your business will look like if we focus on building relationship with either cold or people that are in a sphere of influence by applying 4 things: knowing their occupation, what do they do for a living, right? Where do they work? And if they own a business, what does the business do, right? When it comes to family, right? Is this somebody that is married? Is it somebody that has kids? Is it somebody that is single? Is it somebody that is divorced, right? When it comes to hobbies or lifestyle, right? What do the people like to do for after they're done with a 9 to 5 or after they're done working on their business, right? What do they like to do for fun? What do they do with their spare time or free time, right? And then what type of projects or goals does people have? How would your business look like, guys, if you know those 4 things of every single person that you have on your CRM? You have more bondage. People will be more attached to you, and less people, and this is psychology, by the way. When you give people the level of service that they have never experienced before, and you provide the education on front without you thinking on commission, right? They are more aligned to work with you. They feel scared to leave you. They feel embarrassed to leave you because you provide them value, right? So it is great for us to have an insight if we can, right? But I don't want you to think that unless you know these things that we're talking about in this training about your prospect or about your client, you're not going to pass it along to your lending, right? Remember, guys, our job is to make sure that we equip you with the basics. Our job is not to get you into a loan officer career, okay? Structuring a loan can go in a very different directions, right? You maybe have somebody, the industry call it vanilla client. Vanilla client is, the typical W-2, made 200 grand in income W-2, my credit is 760 plus, and I have 100 grand put away. Everybody would love to work with those clients. Those loans are easy, guys. Very easy to process, right? As long as we have the right documents to process that loan, right? But how does it look like to work with a client that maybe a clear example is a travel nurse, right? Or people that are in staffing agencies, right? That's called inconsistent income, right? And then if we go through that route, then I'm going to lose you guys, because structuring a loan has different pieces, and that is the loan officer's job to make sure that those pieces are glued together to give you guys a client that is pre-approved, and knowing that when you go out there and shop with that client, we're going to process that loan because we already know everything about that client. We know everything about the file. We know the obstacles, and we know what's going to be easy and not easy, simple. And we know what's going to be challenging for us to get. And then we work with the individual, the employer's individual, to get those things done. But the most important thing is just get in the habit of getting to know your clients a little better, right? From occupation, family, recreation or hobby, and then goals or projects, right? Not everybody is a goal-driven person or individual, but somebody's at least working in a project. And then when I say project, guys, it's anything. Hey, what are you guys are working on? What's your goals for 2023? What did you accomplish 2022, and what you did not accomplish 2022, right? Those are easy questions that you can implement on your conversations, because what would happen to a prospect or a client the moment that you become a lifesaver for them? Whether it's, a general contractor or a plumber, or, they told you that they were working on the bathrooms, right? Now you are a solution provider, right? Not everything has to be about the process. Yeah, we got to enjoy the process, whether you're working with a buyer or a seller, or an investor, but make it a habit of getting to know them a little bit deeper, right? That's going to help you in your career. Does that make sense, Casey? CRM, if you don't have a CRM, right? We'll talk after the training. I'll give you some recommendations about CRMs. I'm always big about, for those people who are just recently starting in real estate, do not put money in your real estate business until you start making a little bit of money. Once you start making a little bit of money, then you want to start investing in your real estate business, but don't grab your savings or don't grab your job's income to invest on something that you're learning. Casey, for you, the first 12 months, look at real estate like you're going back to school, right? Like you're going back to get your bachelor's, or you're going back to get to your doctor's. It does not matter what it is. Look at it as, I'm gonna make sure that I'm the best student of the game. And I'm gonna make sure that I'm rubbing shoulders with everybody, not just top producers, right? You gotta rub shoulders with everybody, because everybody has different perspective about certain things. And then you gotta find yourself. You gotta find what works for you, and you gotta find your own system. Does that make sense? Great
Yeah,
question.
that was one thing I always got confused about when everyone told me, oh, you need this, you need that, oh, you should probably get this. But everything I looked at, they all have like monthly fees, weekly fees, annual fees. And I'm like, what is your monthly expense? Because like if you have every single one of these, like how much money are you making and how much are you spending? Because like I was like, I don't have the money right now to buy all of these monthly things to like use. And I was like trying to find like the free versions or the cheaper versions of everything. So I've been looking for a CRM right now and other things.
I'll give you one that is free right now. HubSpot, HUBSPOT.com. Free CRM. Is it the best CRM? Obviously not, right? You're comparing something that is free versus something that it costs money, right? The reason why the other one costs money is because it has features and things in place to make it user friendly, and then make it, to be more productive and things like that. But you don't need nothing fancy. And then I give you one free right now. Excel. Have an Excel sheet, name, number, email, and comments. Very simple. That's free, right? And then once you have a pipeline, and once you have a book of business, and once you start making money, then you start looking for tools that can help you to be more productive. Make sense?
Mhm.
Good. What else? Lady, I haven't heard from you. Are you there?
Yes, I am. I'm listening to you, but I'm doing a little cleaning in the house. Sorry, but my
No,
camera is
it's
not
fine.
working either, so I don't know what's going on with this camera. But this is great
Sorry.
info. I love everything, and of course, you already know how I feel about you guys. A lot of love here for you guys. You guys are awesome. Thanks for the encouragement, the motivation, and the uplifting. We actually
Yeah.
do that. We actually need that. Especially in this industry, how crazy and hectic it is. So thanks for being there all the time.
Thank you guys for giving me the opportunity and your time. That's the bottom line of this, right? So remember, pre-qualification versus pre-approval. Pre-qualification, no papers. It's just based on a conversation and based on something that you fill up online. Can you go out there and shop around with your clients with a pre-qualification letter?
You can, but you want the actual fact. You just don't want to go and shop around based on just a conversation. You want to be able to like show that this person is ready, willing, and able to go with the transaction. But yeah,
Great catch.
you could show them houses, yeah, but that doesn't mean anything.
Great catch. Now, can you submit an offer with that
No,
pre-qualification letter?
no.
All right, good. Pre-approval means that that client went through an extensive analysis of income, credit, assets, and liabilities. And now, based on their income, credit, assets, and liabilities, now they have a pre-approved amount, right? And then in another training, we'll discuss what's a DU and what's an LPA report, which some of you guys may know what that is. But for the ones that don't know what that is just basically a software that gives you an underwriting approval based on what you actually putting in on your loan application, right? So we always want to make sure that we know how to read these reports And then whether you're working with a buyer or a seller, you gotta read the reports, because the reports will tell you the truth. And it will help you to catch some red flags from other lenders, that what they do is that they manipulate the system just to give you the numbers that you're looking for. But then when you give them a contract, whether you're working with a buyer or a seller, then you hear the stories in the industry of, yeah, I had somebody that was pre-approved in my lender, last time, very last minute, we were gonna close and we couldn't close. That's typically, typically, not all the times, but that's typically something that we could have cut early on. And then the reason why you want to cut up early on obstacles is because there's always a way, guys. There's always a way, as long as you cut your obstacles early on. You don't want to be cutting obstacles right when you're about to close or a week before closing. We talk about the importance of understanding what does any bank or any lender looks at when it comes to pre-approving somebody, right? Income, what type of income do they get, right? Whether it's W-2 or 1099, those are two different type of incomes. Most people get confused. You have a question? Okay. Most people get actually confused when it comes to the 1099 way of calculating income. Obviously, the confusion comes from as a 1099, right, versus a W-2. And I'm gonna ask you guys a question. When you guys have a W-2, right? You guys get paid as a W-2, you get, what's the difference between net and what's the difference about gross? Does anybody can tell me what's the difference between gross income and net income?
Isn't gross income like the complete total of everything you made, and net income is what you have a profit?
Yeah.
that you can use
So,
for yourself?
right idea. I'm gonna just give you feedback on the way you phrase the words, right? So the gross income is the money that they're paying you before deductions, right? What are the deductions? Everybody has different deductions. Your taxes, everybody has taxes, right? Your social security, your withholding, your federal, your state, those are your taxes. And then if you have benefits, obviously, before they take money out of your gross income, they're gonna take your benefits, whatever benefits you have, your 401k, your life insurance, and whatnot, depending on the line of job that you do, right? Why it's so important is because in the W-2 world, we go based on gross income, guys. The pre-approvals are based on gross income. When we look at a business owner and a self-employed, the reason why most people get confused is because as a business owner, right? If I'm a self-employed or I own a business, does the bank takes my gross income or my net income?
Net.
Your net income. Why is that? Why not my gross as a self-employed?
Don't know the
business
answer to that one.
Don't business owners have higher tax? Like they have to pay higher tax and they have more expenses because they own a business.
So both statements are true for pre-approval purposes, because we're not tax professional. At least I'm not a tax professional. I'm not an accountant. So the tax bracket has nothing to do with the pre-approval, but the expenses is what has to do with the pre-approval, right? As a business owner or self-employed, I can say I make $100,000, right? That's my gross. But then after my $50,000 expenses, how much income do I have? 50,000, right? On the employee world with a W-2 pay stubs, it doesn't work like that. It's your gross. So always remember, gross W-2 pay stubs, 1099 or corporation is your net, right? We talk about the credit, right? Credit for us. Hey, if they have a hiccup with credit, we put them with a professional that is going to work on their credit, and then we continue. You and I continue to nurture that lead, building relationship, making sure that they know that we're here for them, and then that gives you a person that is not only in the process of becoming your client, but now you have a fan. Now you have somebody that is cheering for your business and talking great about you, very highly about you, when it comes to their co-workers and their family members, right? We also talk about liabilities. What kind of liabilities are actually taking account into your back-end ratio, which is your debt to income ratio, credit cards, car payments, anything that has to do with installment loans. So installment loans is, auto vehicles, personal loans, business loans, lines of credits, right? Student loans, it's a big one, right? Then we also talk about, we didn't talk about assets. I do, before we actually disconnect, I want to talk about a little bit about assets. Assets is just a fancy word for savings, right? If we're working with a buyer, they do need some kind of money, right? There's a lot of help for first-time home buyers, right? That we can look up and try to get them, the help that they need from the savings perspective. But for the most part, buying a home has two things. One is a cost of buying a home. Those are closing costs. And then the other one is an investment, which is your down payment, right? If I buy a home and if my sales price is $200,000 and I put a 20% down payment, if I put 40 grand, what is my equity? $200,000 home. I put 20% down payment, that's 40 grand. What is my loan amount and what is my equity, guys? I'm losing you. $200,000 home, 20% down payment is 40 grand. My loan amount is sales price minus down payment, right? So it's 160 is my amount, 160,000. And my equity is my down payment. I have $40,000 in equity, right? Because what was my sales price? 200,000. How much money I put down? 40,000. So the down payment is you're buying into the equity of the home, right? A lot of people think that down payment is a cost of buying a home. It's not a cost, it's an investment because you're buying into the equity of the home, right? What type of funds can we use for assets? Checking, savings, investments, right? Investment accounts, retirement accounts, pensions, pension funds, anything that is liquid, anything that is considered liquid, right? What funds cannot we cannot use for assets? Can anybody give me an example for funds, not funds, assets that we cannot use for the purchase of a home?
Stocks.
You can use stocks, you can sell stocks, and then once you sell your stocks, you can actually use the funds or the proceedings of selling your stocks. So that's part
I
of
would-
investments, right?
Yes, definitely. I would say cars because they depreciate. They have no value after it depreciates.
What?
Cars. Is that an
Cars,
asset
so-
that, yeah,
That's a great one. Can I use a car as an asset? No, but if I sell a car, right?
yes.
If I sell a car and then I get the money paid to me in a verifiable way, right? Anything I use for assets, what I want you to remember is that you have to source it out, right? You gotta show the papers of that money. Where does that money come from, right? So it's something called seasoning time. So for assets or savings for the purchase, you want to make sure that you have those funds for at least 60 days season on a qualifiable account. And qualifiable account is a checking, savings, investments, retirement funds, pension funds. Those are good accounts that you can use for the purchase of a home. All right. All right, guys. Well, we are actually right about the hour dot. I want to be respectful of your time. I know you guys have, a busy schedule, and I want to make sure that I'm always leaving you with availability. We're here to help you guys, to support you, to provide you and your clients the help that you need from the financial point of view. I would love to continue seeing you guys in our next sessions every Wednesday. If you can make it a thing where you guys can come in. And then on our next one, what I want to do for those that show up, I want to make sure that you have some scenarios of maybe conversations that you strike with somebody, and maybe you have some obstacles. So that way we can all work as a team and help each other out. Okay.
Not a problem.
All right, guys. Well, thank you so much for making the time.
Thank you.
Remember to take them some cafecito next time.
Absolutely. I love having conversations with Cafecito. What a better way to break the ice with somebody when you're grabbing coffee or whatever, guys, whatever you guys are doing. Why grabbing breakfast, lunch, or dinner by yourself when you can actually make an appointment with somebody and apply the principles that we learned today, which is occupation, family, recreation, and goals, and having a place where you can actually build a profile of that individual. So that way you build a stronger relationship, a stronger bond with them. And then you continue to provide value, educating them, and they can see you as a trusted advisor. Okay, guys?
Okay. Gracias.
Thank you. Have a great day.
Thank you.
All right, guys, take care. Have a great
Thank you.
day, okay? See you in the next one.
Can I get your name?
What?
Can I get your full name?
Oh, yeah, my full name is Jonathan.
Mhm.
And then my last name is Perea, Perea. You can call me Johnny, Casey. Everybody calls me Johnny, okay?
Okay.
All right, guys, for those that send me the,
Casey.
Bye.
Yeah.
I'll be
Bye.
sending you guys the checklist shortly, okay?
Okay.
All right, thank you, Johnny.
Guys, bye-bye, guys.
Bye.